Hi everyone, welcome back to Corporate Decoder, the place where we uncover the financial secrets behind the corporate world. And today we're diving into Citrine Global's latest report, which really has some interesting points about their focus and forward-looking plans. We'll be looking at their financial performance for the first quarter of 2024 and how recent events in Israel are impacting their operations. If you like getting all the juicy details from these filings, make sure you subscribe and join our Discord community linked in the description below. It's where we break down all the latest corporate news. So this is the quarterly report filed by Citrine Global Corp detailing their financial status and business operations as of March 31, 2024. The company operates mostly out of Israel and is trying to make it big in the plant-based wellness and pharma sector. Let's kick things off by looking at their balance sheet, which is like a snapshot of what the company owns and owes. As of March 31, 2024, Citrine Global had total assets of $259,000. That's a slight increase from $286,000 at the end of 2023. On the flip side, their total liabilities stood at $576,000 at the end of March 2024, up from $496,000 in December 2023. This is where it gets a bit concerning. They have a total stockholders deficit of $267,000 at March 31, 2000, $475,000 at December 31, 2000, $5,000 at December 31, 22. This means the company owes more than it owns, which is not a good sign for investors. Now let's talk about how the company is actually performing in terms of making money or losing it. For the first 3 months of 2024, the company reported a net loss of $252,000. This is a much better result compared to the $852,000 loss in the same period of 2023. Their research and development expenses also dropped significantly from $28,000 in the first quarter of 2024. This could mean they are cutting costs or that their development efforts are reaching a new phase. Marketing, general and administrative expenses were $403,204 down from $489,000 in the same period of 23. This reduction is partly due to lower non-cash share-based compensation expenses. This statement shows how the equity section of the balance sheet has changed over time. The company issued new shares during the first quarter of 2024 through a share purchase agreement, which slightly increased their common stock value, but also their accumulated deficit. Here we see how cash moved in and out of the company. Citrine Global used $45,000 in cash for its operating activities in the first 3 months of 2024. That's an improvement from the $65,000 used in the same period of 2023. Financing activities provided them with $42,000 in cash in the first quarter of 2024, an increase from $51,000 in the previous year, which seems to be from short-term borrowing. The notes to the financial statements provide crucial details that help us understand the numbers better. Citrine Global was incorporated in Delaware in 2010, and its common stock is traded on the OTC market under the symbol CTGL. A key point here is the company's involvement in Canovation Center Israel Limited, where its Israeli subsidiary holds 60% of the shares. This entity was incorporated with other parties, including the company's CEO and a former director's company. This refers to a credit facility agreement where a lender committed to fund Canovation up to approximately $857,000. This facility is secured by Canovation's rights to industrial land and involves guarantees from related parties. This section outlines the accounting rules and estimates the company follows. The company measures certain assets and liabilities at fair value. Here we see that the option to purchase IBOT shares is valued at $932,000 as of March 31, $2,000. As of March 31, 2000, Albanese is $13,000. The company uses the Black-Scholes model for its stock options, valuing them based on assumptions like dividend yield, interest rates, and volatility. This note details the company's stock option activity for employees and directors. As of March 31, 24, there were over 121 million stock options outstanding, and about 72 million of those were exercisable. The company recorded $91,000 in stock-based compensation expense for the first 3 months of 2024, which is less than the $2,600 and $269,000 in the same period of 23. This note explains the company's convertible notes and how their fair value is calculated. The fair value of the convertible component of their convertible notes was estimated at $13,000 using specific valuation assumptions. Here they disclose transactions and balances with related parties, which is common in smaller companies. They spent $233,000 on directors' compensation and fees to officers in the first quarter of 2024, which is part of their general and administrative expenses. Also, related parties owe them $2016,000 in accrued compensation as of March 31, 2024. This is always a key section as it highlights important events that happened around the reporting date. Mr. Dornberger resigned from his position as a director on the board of the company. The company entered into a term sheet agreement with X Group Fund of Funds Limited Partnership for a purchase of securities. However, this agreement lapsed because the group did not remit the agreed amounts on time. Mr. Ilan Ben Ishay resigned from his position as a director on the board of subsidiary CTGL Citrine Global Israel Limited, and later from Canovation Center Israel Limited, and later from Canovation Center Israel Limited. Dear Light Limited entered into consulting agreements with the company and its subsidiaries for strategic planning, business development, funding, facilitation, and project management services. Monthly retainer fees total $11,000, but payments are deferred until certain conditions are met. Dear Light Limited also signed an investment agreement committing to invest $137,000 in exchange for common shares and warrants. Canovation Center Israel Limited received official notification it had been awarded a government grant of $12.5 million NES. Approximately $3.4 million. This grant supports the establishment of the Skytech Innovation and Production Center. The Israeli subsidiary Canovation Center Israel Limited changed its name to Skytech Orion Limited. The company completed the conversion of outstanding convertible loan principal amounts totaling $1,764,106 into equity, which is a significant move to reduce debt. Citrine Global Corp changed its name to Skytech Orion Global Corp, reflecting its focus on UAV and drone solutions. This section gives management's perspective on the company's performance and outlook. The war in Israel has significantly impacted the company's operations, causing widespread uncertainty and instability. Management is actively assessing the potential impacts on operations, investments, and liquidity. The company holds a 60% equity interest in Canovation Center Israel Limited, now known as Skytech Orion Limited. They also hold a 19% equity interest in Probakawa Israel Botanicals Limited, a GMP, certified manufacturing facility. Citrine Global sees a big opportunity in the global nutritional supplements market, projected to reach $624.7 billion by 2030. They plan to leverage plant-based solutions and expand globally, particularly in the US market. The company is subject to regulations in every jurisdiction it plans to operate in and needs to obtain approvals, licenses, or certifications from relevant authorities for its products. Their manufacturing facility, IBOT Israel Botanicals, is GMP certified and approved by the Israeli Ministry of Health, which is crucial for credibility. Citrine Global's primary executive office is located in Caesarea, Israel. The company issued a promissory note in favor of 1800 Diagonal Lending LLC for $632,500 and $4 in net proceeds. The note was fully repaid by December 2024. The company has experienced several significant events, including a resignation of a director and the lapse of an agreement with X Group due to unfulfilled payment terms. Key subsequent events include resignation of directors, the settlement of a dispute with a former consultant, and the renewal and increase of a short-term loan with SR Accord Limited, with additional personal guarantees. This part discusses the effectiveness of the company's disclosure controls and procedures. The company's management concluded that their disclosure controls and procedures are not effective. This is a critical point indicating potential weaknesses in how they communicate information. This section details the risks associated with investing in the company. A major risk highlighted is the impact of the ongoing war in Israel, which has brought significant geopolitical and economic instability. This could disrupt supply chains operations or access to resources. The company is closely monitoring the situation. Here we see the list of exhibits filed with the report, including certifications required by the SEC. These are the certifications of the CEO and CFO confirming the accuracy of the financial report. Stop now. Looking at Citrine Global's financial health, it's clear they are in a growth phase but facing considerable challenges. The reduced net loss in the first quarter of 2024 is a positive sign, but the company still operates with a deficit, meaning its liabilities outweigh its assets. The fact that their disclosure controls are not effective is also a red flag for investors, suggesting potential issues in internal reporting and transparency. The war in Israel adds another layer of significant risk impacting operations and economic stabilities outweigh its assets. The fact that their disclosure controls are not effective is also a red flag for investors, suggesting potential issues in internal reporting and transparency. The war in Israel adds another layer of significant risk impacting operations and economic stability. While their focus on the growing plant-based wellness market is a good strategic move, the company needs to overcome its financial hurdles and strengthen its internal controls to truly unlock its potential. What do you all think about Citrine Global's latest report and their strategy for the future? Let me know your thoughts in the comments below. If you found this breakdown helpful, give this video a thumbs up and subscribe for more deep dives into the financial world. Don't forget to join our Discord community for more discussions and exclusive content. See you next time.